Bankman-Fried and his colleagues were part of those counterparties. Wow.
Shonali, the issue a lot of people are going to have is, if this is happening at FTX, is it happening elsewhere?
Take us back, if you could, to when you first got the call from Sam and you first had a chance to look at the books. Because I think a lot of people are still trying to understand exactly what happened here. How much of this was about commingling? How much of this was about terrible marking of the books? What did you see?
Yeah, I think I got a call from Sam 48 hours after I made the tweet, but then we got our team on it. It was pretty clear pretty soon that there's misappropriation of user funds. The user funds are gone. At that point, clearly that he lied to his users, his investors, his VC investors, his employees. At that point, I thought I couldn't, like whatever data that's in the data room, we couldn't trust anymore. So it was quite hard for us to do that due diligence. So we didn't go very far.
Do you think he understood what he was doing?
But I think it will be very, very clear that Sam knows that he was using the user funds to do trading for Alameda.
How much of the funds can they not locate?
I think if you look at the declaration by John J. Ray, remember this is the man who oversaw the liquidation of the Enron bankruptcy as well to try to recoup funds. He had very strong language. He said that there was a complete failure of corporate controls, and he also cited concentration of control in the hands of a small group of people. Tracy Alloway of Bloomberg also pointed out some really interesting details in the footnotes of this filing that showed you loans that went from Alameda had gone to certain individuals, and certain amounts of this money was used to pay, according to this filing and the declaration from John Ray, to pay for personal assets of Sam Bankman-Fried as well as his deputies. So it is definitely worth a read, this filing.
Are those Twitter posts going to be a problem, do you think, Shonali?
In this filing, it said that Alameda made loans, we think, to the FTX executives.
They named him by name in the filing and the amounts.
If Alameda wound up getting consumer money from FTX, this is like an FTX financing FTX executives in some kind of circular way.
Well, guys, the rabbit hole goes deep. I appreciate you watching. My name is Chris. This is Wheelhouse Trading, and welcome to the Wheelhouse. We have a Discord full of traders, a great community where you can learn, grow, and have a support group. The link is in the description. Come on in. Here is the total cryptocurrency prices by market cap. Currently, we're at 836.45 billion, a slight increase over yesterday. Most crypto is hovering around where it was yesterday. We have had some minor pumps, but we're really just range bound. A lot of conflicting, uncertain price action going on. All right, let's take a look at our crypto bubbles. We got a little bit of a mixed bag out there. Everything essentially is just kind of hovering. People are waiting to see what the contagion effects really look like out there. What the FUD is going to look like, how deep the rabbit hole goes. You know, the stock market's going to do what it does. It's going to move. It's going to accept that we have a lower inflation report, and if there's a second one, it's really going to rally. But until we understand the depth of the Sam Bankman-Fried and FTX situation, we really can't move forward in crypto as far as price action or value of the tokens. It says here FTX will be the last giant to fall this cycle, hedge fund co-founder. This bear market has seen the collapse of Celsius, Three Arrows Capital, Voyager, and now FTX, but the worst is likely over, a hedge fund executive suggests. While the FTX crisis is continuing to unfold, the former head of risk at Credit Suisse believes the exchange's fall from grace should be the last catastrophic event, at least in this market cycle. The former head of valuation risk at Credit Suisse and now co-founder of crypto hedge fund ZX Squared Capital said that FTX's fall was part of a deleveraging process that began after the COVID-19 pandemic and further accelerated after the fall of Terra Luna, formerly known as Terra. It's true. If you have a devaluing asset and you're staking and you're letting them use your tokens to trade or make risky bets to give you that high yield, there's going to be a problem. There always is. In every bear market, there's a deleveraging. I agree with this guy. He says, I'm sure there are multiple players that will probably get impacted in the following weeks. You know, small, large, but I would say this one in terms of magnitude will be one of the larger ones before the whole cycle really ends. Right here it says U.S. crypto exchanges lead Bitcoin exodus, over 1.5 billion in Bitcoin withdrawn in 1 week. Cold feet are in charge as exchange users continue to move Bitcoin from exchanges to non-custodial wallets. So this is cool. Voyager token surges on report that Binance to offer lifeline to the bankrupt crypto lender. Voyager filed for Chapter 11 bankruptcy protection in July, citing more than 100,000 creditors and as much as $10 billion in assets and liabilities. We'll follow this story. That's really cool. I really hope that people get their money back. A lot of people have lost money in this bear market. Crypto market analysis, risk management remains paramount in the coming weeks. Derivatives markets show some signs of hope, but only slightly. Funding rates have turned positive for Bitcoin in an early, albeit hopeful sign that market sentiment is shifting positive. As an analyst, it would be improper and even irresponsible to suggest that this marks anything remotely close to a bottom. The starting point for investment decisions should center on risk management and then risk management again. Institutional investors' actions embody the strategy, as many have remained on the sidelines during recent weeks' turmoil. The looming uncertainty that other crypto entities will soon be in distress only adds to the motivation to wait. As some groups must liquidate Bitcoin and Ethereum, the cost basis for both will only improve. I spoke about that in depth in yesterday's video and gave examples of exactly how that can happen. The liquidation crisis and offloading specific assets with lower conviction through a process of elimination, which can create a big problem in the crypto market. If you haven't watched that video, check it out. It's just yesterday's video. It says here that Gemini recovers from service outage following Genesis withdrawal freeze. Gemini, the crypto exchange founded by the Winklevoss twins in 2014, experienced sweeping service disruptions shortly after Genesis froze customer withdrawals on Wednesday. I talked about it in yesterday's video. These guys always have an excuse. They're saying it's Amazon, Crypto.com, it was an accident to Gate.io, on and on. We just don't know. Just put your crypto in your own wallet and let the dust settle. I think that's the best thing that you could do at this point. I'm a trader. I like to trade. I'm just waiting. It is what it is. Right here, I have pulled up Binance CEO CZ on FTX crash. We've been set back a few years, with one of the biggest crypto businesses falling overnight after getting caught misappropriating user funds. CZ believed the episode was devastating for the industry. We have Bahamian securities regulator ordered the transfer of FTX digital assets. The Bahamian securities regulator clarified it directed FTX to move its digital assets to a wallet owned by the commission on November 12th. And right here, crypto responds sideways to FTX and related crisis. The largest cryptocurrency by market cap was recently up about 1% and hovering comfortably over its 16,000 support of the past 9 days. Genesis, a huge crypto lending arm, has halted customer withdrawals in the wake of the FTX collapse. Now, Genesis is one of the main lenders for Grayscale, as well as partners or owners with CoinDesk, all under the digital marketing agency. So it says here the unit known as Genesis Global Capital serves as an institutional client base and had 2.8 billion in total active loans as of the end of the third quarter of 2022. The lending arm of crypto investment bank Genesis Global Trading is temporarily suspending redemptions and new loan originations in the wake of FTX collapse.
Never in my career have I seen such a complete failure of corporate controls and such a complete absence of trustworthy financial information as occurred here. Ray said FTX's systems compromised integrity and had faulty regulatory oversight abroad. He noted concentration of control in the hands of what he called a, quote, very small group of inexperienced, unsophisticated, and potentially compromised individuals. He called the situation, quote, unprecedented. Ray also criticized failure to reconcile blockchain positions daily, software used to conceal the misuse of customer funds, and the absence of independent governance between Alameda and FTX and other companies. This as court filings made in the Bahamas by Bahamas liquidators late Wednesday said that there were signs of, quote, serious fraud and mismanagement. We are seeing continued contagion from FTX's bankruptcy spread within the industry. On Wednesday, we learned that the lending arm of Genesis Global Trading, which is a major institutional lender to digital hedge funds, exchanges, and other digital investment firms, suspended new loans and redemptions after a surge in withdrawals following FTX's bankruptcy. And soon after that, Gemini, the crypto trading platform that is owned by the Winklevoss twins, said it could not meet its customer obligations due to exposure to Genesis. Meanwhile, we've just learned this morning that the U.S. arm of Binance is reportedly preparing a bid for bankrupt lending platform Voyager Digital. Of course, Voyager's assets were auctioned off earlier this year and actually won by, at the time, White Knight FTX, but now given its bankruptcy, those assets up for grab again, Binance looking to swoop back in.